You ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, shake that. Raise your hands up, raise them out.
Hi everyone, and welcome back. We had a couple of days off, and I hope everyone had a nice break as well. If you did celebrate the Chinese New Year too. It is Thursday. It's already into February. We're the 3rd now of Feb 2022. And a big welcome to everyone watching the call live from the LCMS Traders Club as well. If you are looking to join the club, make sure you visit the Jindao Tai website as well to get involved for live fundamental updates in regards to economic news. We've got live trading updates, as well as a lot of ideas being shared in the markets from when they really start kicking off later in the day as well. So we are around, and we are willing to help anyone that's looking to learn to be more consistently profitable in the markets. Now, before we get into the yen pairs, gold, and the US dollar index, I'll just share the risk disclaimer as well. We will be sharing trade ideas, so I will read this out too. Any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. And just to get things kicked off today, we do have a little bit going on later in the day with the Bank of England, as well as events taking place in the EU too. So I've just got Gim Hong here, currency strategist with LCMS Traders, to discuss these events. And over to you now, Gimmy.
All right, thank you very much, Scott. Welcome back, everyone. Yes, we do have quite a little bit happening on later on today. Okay, two major central banks will be making their monetary policy announcement decision later on in the evening, GMT +8. Okay, I shall start off with the more, I would say, boring one. Okay, probably uneventful. Okay, which is the European Central Bank. Okay, so the announcement will be out at 2045 GMT +8, and then the press conference, okay, will take place at 2130 GMT +8. Okay, previously, all right, the ECB held policy unchanged. Okay, and in terms of the PPP, okay, the Pandemic Emergency Purchase Program, it is expected, okay, that the bonds buying under this PPP will slow down, okay, during the first quarter of 2022, which is pretty much right now, okay, and then it will conclude in March, okay, which then, okay, the reinvestment horizon, okay, the reinvestment, I would say the stage will come in, okay, for the PPP. And the central bank has also extended the reinvestment horizon for the PPP until at least 2024. Well, it's to give them more, I would say, more time to actually purchase bonds, okay, because the central bank deemed that it's necessary to provide more support to the Eurozone economy, all right? That is for the PPP. Now, on the other hand, we have the Assets Purchase Program, the APP. At the moment, okay, bonds buying under this APP program, okay, is being carried out at 20 billion euros per month, okay. Since the PPP will be ending in March, okay, it may actually cause a knee-jerk reaction, which is why the European Central Bank has decided, okay, from Q2 onwards, all right, the bonds buying under APP, okay, Asset Purchase Program, will be increased from the current 20 billion euros per month to 40 billion euros per month, okay, for Q2, all right. And then after which, during the third quarter of this year, it will be toned down to 30 billion euros per month, okay? And then from October, okay, 2022, which is the fourth quarter onwards, it will be toned down further back to the 20 billion euros per month rate, okay? And it will, well, it will stay at that level, that pace, okay, 20, for as long as necessary, okay? Of course, we are hoping that the central bank will actually put an end to it as soon as possible, okay? Probably by the end of this year, all right? So that was what the European Central Bank actually announced during its previous meeting, okay? I think it was back in December. So what can we expect them? What can we expect from them this time around, okay? No change in monetary policy is expected. Interest rate remains as it is, 0 or negative 0.1, depending on the deposit rate or the other two rates, okay? So that's for interest rates. QE wise, okay, no change as expected, okay? But, okay, we would like to focus on two things, okay? The first thing that we want to focus on is inflation, okay? As you guys already know, all right? I've been saying this too many times already, okay? Inflation in Eurozone, as well as many other countries, has risen to decades high level, okay? For the Eurozone itself, I think it was probably like some 10 or 20-year high inflation level already, all right? So, but the thing we have been hearing from Christine Lagarde, okay, the president of ECB, is that inflation is just transitory, okay? It's just temporary. It will actually come back down to our 2% target eventually and things like that, all right? Long story short, the ECB has been downplaying the ever-rising inflation, just like what the US Federal Reserve has been doing previously, okay, up until most recently. They decided that, well, inflation is actually burning hot, okay? It's really running very, very hot in the US. And, well, it's no longer considered transitory anymore, okay, in the US, at least from the Jerome Powell's point of view, okay? And which is why they are trying to speed up this whole QE tapering, okay, which is why they actually doubled the pace of tapering in December, okay. Well, that's for the Federal Reserve, all right. But for the ECB, all right, they have been downplaying up until now, okay, which is why we want to pay attention to them, to what their view is on inflation in the Eurozone, okay. Is it still going to be downplayed? Is it still going to well, supposedly run temporarily, transitory and things like that, okay? Because if they were to downplay inflation, okay, this may actually have a negative impact on euro, meaning the euro may actually weaken further, okay, if the ECB were to downplay the ongoing rising inflation, okay? Now, however, if the ECB, okay, were to say that, oh, actually, we feel that inflation may actually be more sustained than previous, than the previous few months, okay, then it may actually lead to a strengthening in the euro, okay, because, okay, if the ECB were to say that inflation seems to be more persistent than before, okay, now this, as many of you may already know, okay, may push the ECB to ending QE faster. Okay, we all know that PEPP is ending in March, but we don't really know when APP will end. Okay, not until the end of the year at least. Okay, because like I mentioned previously, okay, back in the December's meeting, APP will run at 20 billion euros per month for as long as necessary. Okay, from October onwards, after the whole adjustments, just to so-called like have a smooth transition, okay, from the PPP to its end, okay, to the end of PPP bond buying, all right? So if the ECB, were to find that, were to change their view on inflation, okay, claiming that it's more persistent, that will have a strong impact, a positive impact on the euro. Okay, so that is the first thing that we want to pay attention to. Any change in views of inflation, whether or not it's persistent, whether or not it's transitory as usual, and things like that. Okay. The second thing that we should be paying attention to is let me check it out. Okay, it's basically, well, like I've mentioned just now, when will APP end? Okay, because as of right now, APP is expected to run for as long as necessary. Okay, if the central bank, okay, were to mention something like to provide a timeline, okay, to provide a timeline on when APP is expected to end, okay, say for example, right now, they are actually expecting APP to end, they're expecting APP to be toned down to 20 billion euros per month, okay, from October 2022 onwards. And if they were to say something like, probably by the start of 2023, okay, we can actually expect APP to end or maybe to tone down further from 20 to 10, okay, hence a tapering, okay, or maybe like what Christine Lagarde likes to put it, a recalibration of monetary policy, then that is actually good for the euro, okay, hence we may actually be seeing a strengthening in the euro, right? But if we don't get any information on this whole, APP, how is it going to be like in 2023 or maybe after, Q4 2022, then that may actually lead to some weakening in the euro. Okay, I mean, the default case right now is that we do not have any information on APP on when it will end, right? So any positive information coming in will be much stronger, okay, than will have much stronger impact on euro than having no news, okay, because no news is the default right now. So any positive news coming in will be good for the euro. So unlikely we're going to receive this kind of forward guidance, okay, or any information on APP in the rate statement this time around, okay, but we can pay attention to the press conference that will be held at 21:30 GMT plus 8. Why do I say that? Because reporters, journalists who are attending the press conference, okay, they will get a chance to ask Christine Lagarde, okay, the president of ECB, questions, okay, and well, I'm pretty confident, I'm pretty sure that the journalists will be asking Christine Lagarde on, so can we actually expect APP to end in 2023, okay, or or maybe can we expect an earlier timeline for interest rate hike coming from the central bank with this whole ever rising inflation and things like that, okay? But of course, that all depends on the decision carried out by the ECB, okay, which can be found in the rate statement, all right? So, well, if the rate statement doesn't provide anything, we'll have to go over to the press conference, okay? So that's for the ECB that will take place tonight at 20:45 GMT plus 8, okay? Anything that any decision that goes down during the meeting or any new hints on QE and things like that, I will provide you guys again a breakdown, okay, in the Traders Club for sure, all right? And then if you guys are watching this from YouTube, I will go through this again next, probably next Wednesday, okay, when we talk about the euro again, all right? So that is for the ECB. That's all I have for the prep for ECB, all right? Any questions on this ECB? It's quite a lot to take in, I would say, but okay, if you guys need to take some time to digest, feel free to do so, okay? And if you guys have any questions just before the meeting later on, just put your questions in the Ecofin platform and we will answer. I will personally answer you guys just before the whole announcement takes place, okay? So if there's no questions for now, okay, let me move on to the Bank of England monetary policy meeting. Okay, why do I save it for, right after the ECB is because it's more exciting, okay? So the Bank of England will be announcing their decision at 20:00 GMT plus 8. And also a press conference will take place at 20:30 GMT plus 8, just 30 minutes after the announcement has been released. Okay. So previously, the Bank of England actually hiked interest rate by 0.15. Okay. So it was a hike from 0.1 to 0.25. Okay. It was a surprise hike, I would say. All right. And in terms of the voting, 8 out of 9 members actually voted for a hike. And then one of the members actually voted for no change. Okay. Yeah, it was a pretty bullish hike because of the surprise, right? Nobody was expecting a hike from the Bank of England after the disappointment delivered back in November's meeting, right? So this time around, a hike in December, actually surprised the market, leading to the strengthening of the British pound, all right? So what can we expect from the central bank this time around? Personally, okay, I would say we can actually expect another round of rate hike coming in from the Bank of England, okay? Probably a 0.25% hike, okay? That will bring the current rates from 0.25 to 0.5, okay? Like what Governor Bailey and, it's the whole central bank, I would say, has actually mentioned in the monetary policy statement, okay? And even in the report, all right? They are trying to tone down this whole inflation, this rise in inflation, things like that, okay? And employment in UK has been going well, all right? And despite the whole ending of the furlough scheme, which actually is the government's, the UK government's support, okay, to workers, okay, who have been put on a temporary, unemployment status, okay? So with the ending of the furlough scheme, okay, the initial expectation was that it may actually have a negative impact on the UK employment, UK jobs market, okay? But once it ended last year, there wasn't too big of a negative impact on the UK jobs market, okay? Which is why the Bank of England was rather confident, okay, in terms of how, how the jobs market is at the moment, the situation is at the moment, okay? And because of that, plus we have I think 30-year high inflation from the most recent data release, okay, coming in from the UK's labor, the labor market, okay, the labor department, okay, which they actually released the inflation data, okay. So with this, employment market going well and the inflation rising like 3 decades high level, the Bank of England will be determined to increase rate hike further, okay, which is why in the probably in the next 1 or 2 more meetings, okay, monetary policy meetings from the central bank, we can actually expect rate hikes to take place. So this time around, yes, we can expect the BOE to hike at least, okay, probably by the 0.25% of interest rate, okay. So that's for interest rates. How about QE? QE may be ending soon already, okay, based on the amount of bonds they have already purchased at the moment, okay. So probably in the next 1 or 2 months, or during the first quarter of 2022, okay, the Bank of England would have already purchased the amount of bonds, the maximum amount of bonds, okay, altogether. So we would want to pay attention to any mentioning of QE changes once the amount of bonds, the maximum limit of the bonds has been purchased, okay. If let's say they have no plans for QE because like similar to the Federal Reserve, okay, they may deem that bonds buying support for the market is not necessary anymore, it's no longer needed, and hence we will be going into, we'll eventually look at, unloading of bonds, okay. If the Bank of England were to say something like that, then it may actually strengthen the British pound as well, okay. So we have to pay attention to any information provided through the interest rate statement or through the press conference, okay, in terms of QE life after QE after it ends. Okay, life for the QE once it ends, when the maximum capacity has been reached. All right. So that's for the Bank of England preparation. All right. It's going to be quite a bit of a move, I believe, tonight, later on, when the Bank of England announces the decision. Okay. So any questions on BOE or even the ECB? Okay. Okay. No questions at the moment. As usual, any questions, just put it in the Ecofin platform, and last minute questions, I would say, okay, in terms of trading and things like that, how to trade the euro or the British pound. Okay, so if there's no questions for now, I will hand it over to Scott for his analysis on the DXY. Back to you, Scott.
Thanks for that, Gimme. And I'll get into it now, everyone. And there has been some movement since the last currency call as well on Monday this week. So we've got the daily chart up now. And currently we are resting on the 96 flat support level here. And we've seen several days of selling after we saw it peak at around 97.45 there. We have seen a pullback. If I go to the hourly, just to go through what we did see during the session over in the US last night, just with our time zone here being GMT +8, we did see it did pick up a little bit, but we are very much hovering around this 96 support level now. We've got, there has been some previous buying down at 95.50. We've also got 96, pretty much 97 to consider as the next resistance level. So what happened in the news last night is what I'll touch upon now. And we do have an important news event to just take note of. So for tomorrow, and that's Friday the 4th of Feb, we've got the NFP as well. That is expected to be a little bit weaker as well at 145K. What I did find interesting was, so Wednesday evening, we did have last night, we had the ADP non-farm employment change. It came in at negative 301K, expected was 185K. That's quite significant. So it doesn't necessarily strongly correlate with the non-farm payrolls, but it seems that one of the factors was still Omicron, and that is still a present concern, just with the amount of people that can't actually be in the workplace as well. So, and obviously it can cause issues with businesses where they can't operate at full capacity, they can't expand because there's so few people available in the workforce to actually utilize. But for later this evening, besides the news out of the UK and the Eurozone, we've got the unemployment claims, and not a strong price move. But at 11 o'clock this evening, GMT +8, we've got the ISM services PMI, and that is expected to be a little bit weaker as well. And frankly, I think it's just going to be pretty sideways just in the lead up to the NFP. We can sometimes see a little bit of a run up leading into the NFP, but I think that ADP figure being so weak, and I'll just remind you guys about this, negative 301K. So might see a bit of a dampener on the US dollar. And again, it's always interesting to see how the stocks move around the opening, around 10:30 in the evening, GMT +8. But again, it's just a matter now of waiting to see what happens with that NFP figure. I would say that the downside seems to be established, and we've just got to sort of sit back and wait and just see what sort of comments come out we've still got the Russia-Ukraine issue too. And if that escalates further, we can see a lift in the US dollar on that. So I'm cautious to sort of say more shorting opportunities. I would say I prefer to be a buy here, but we might well see it the price dip back below 96, maybe 95.70 to 95.80 is recent highs that we've seen. So I would say caution needs to be shown with looking to continue this selling. If you are looking to short, I would be way more inclined to take along, just with everything that's going on. I have seen some contrarian views about the Fed maybe not tightening as much in regards to the interest rate increases, but it makes a lot more sense just personally that they will have to do that soon. So just stand by on that, I would say. But shorting opportunities would be very scalpy, and it's not something that I personally do. So those are my thoughts there, guys, with the situation with the US index. And we've got a few things going on now. We've got the yen pairs, and we've also got gold to discuss too with Gim again. So I'll hand it back to you, Gimme.
All right, thank you, Scott. Now, heading over to the charts, starting off with dollar yen. Okay, so for dollar yen, all right, we can see on a daily time frame that the resistance of 115 over here, okay, has been rejected. All right, yeah, it seems like towards the end of January, it just couldn't break above. And then like what Scott has mentioned, okay, with the whole Ukraine-Russia issue going on, it's pretty much like a risk off for the US dollar as well. Okay, although the US dollar is also considered a safe haven, but because they have military forces, or they are kind of involved in this tension between Russia and and Ukraine. Okay, so that actually causes some downwards pressure on the US dollar as well. Okay, hence at the moment, I'm not looking to buy the dollar yen. So if we were to look to sell, okay, you will realize that there's this 114 over here. Okay, so if the dollar yen were to break below the 114 level, okay, heading to the 113.8 level over here, okay, then I will be looking for buying opportunities. All right, and then my potential stop loss level would be above the 114 key level, which is the 114.2. This should provide quite a, I would say, safe safe level to set for your stop loss. Okay, that is a 40 pips stop loss, and then my potential take profit would be at 113.2, which is 60 pips. Okay, so this is like a 1:1.5 risk reward. All right, so like I've mentioned, we may see dollar yen trade lower. Okay, maybe today, maybe tomorrow, but as we head closer and closer to the NFP Friday, okay, which is tomorrow already. Actually, yeah, it's tomorrow already, right? We may actually see lesser and lesser, slower and slower market moving and things like that. Okay, so because of that, we will need the dollar yen to clear the 114 level, okay, before we look for any selling opportunities, because what we don't want to be in a situation whereby the dollar yen were to hit to 114, okay, and if we were to sell right now, okay, dollar yen kind of like hovers around that level, not sure if it should actually break below the 114 level, okay, because of the upcoming NFP, because of the uncertainty going on in the Russia and Ukraine issue. Okay, so wait for a clear break below 114, probably around 113.8 before looking for selling opportunities. Okay, short-term selling opportunities. All right, that is for dollar yen. Now let's head over to euro yen. So as you can see on a daily basis, okay, on a daily time frame, okay, euro yen has already broken above. Okay, this was back in 31st of January, the last day of January. It actually shot above the 129 key level. Okay, ECB tonight. Okay, so it's a bit of a tricky situation right now. All right, but I actually have two kinds of orders. One is the buy stop order, one is the sell stop order that I'm eyeing at. All right, the first one to go through is the buying stop order, which we have an entry at 129.5, which is here. Okay, and then my stop loss would be at potential. Okay, stop loss would be at 128.8, which is around here. Okay, and then my potential take profit level, which will be at 130.3. Okay, So my stop loss will be 70 pips and my take profit will be 80 pips, okay, which is close to a 1:1 risk reward level. Now, right now, okay, we can actually expect the euro, okay, not only euro yen, okay, probably even euro dollar as well, okay, to actually consolidate for the time being up until the ECB's announcements later today, okay. So in a scenario, okay, whereby the ECB were to be hawkish, okay, like I mentioned earlier, maybe they might say something like, inflation seems to be more persistent than we have initially expected, okay, things like that, okay, that comments like these may, okay, actually motivate the central bank to carry out more, I would say, possibility of carrying out QE tapering or an earlier interest rate hike timeline, okay, to carry forward the interest rate hike timeline. So things like that would actually be hawkish, okay, coming in from the central bank. Hence, it will be positive for euro, okay. Hence, we may actually be seeing the euro strengthen. So in the case whereby the euro to strengthen because of all these positive hawkish comments from the central bank, then we can look for a buy at the around the 129.5 level. Okay, so but what if it's negative? What if it's dovish comments coming from the president herself? Okay, like, you know, we still feel that inflation is transitory, is likely going to come back down and things like that. Okay, then this may actually be negative for the euro. Hence, we can actually look for selling opportunities once it breaks below the 129 key level. Okay, it has to break below because this 129 is, you know, like it's just like the dollar yen, you know, price may actually hover around that key level, not knowing if it should break below. Okay, unless we have a very, very, very dovish message, a tone coming in from the central bank, which will likely push euro yen way below the 129 level strongly. Okay, so the thing is, any other messages sent by, or any other dovish messages sent by the European Central Bank may push euro yen down to the 129 level, but only if it breaks below the 129, okay, level, then we will be looking for selling opportunities, specifically at the 129.8 level. Okay, let me just change the color of this, just so, okay, actually I'm just going to add another line and change the color. Okay, so now here, okay, let me just change it to red. Okay, okay, maybe not red, maybe orange, it's clearer. Okay, so in a scenario whereby we have a, what do you call that, a dovish ECB, okay, and euro yen were to react negatively towards the comments made by the central bank, and euro yen were to trade at 128.8, we'll be looking for selling opportunities. Okay, and then our stop loss will be set at 129.2, which is around here. Okay, and then my potential take profit level will be at 128.3. So stop loss will be at 40 pips, take profit will be at 50 pips. Once again, a pretty much close to 1:1 risk reward ratio. Okay, so it all depends on how the ECB decision were to turn out. Well, decision pretty much no change. Okay, but any positive or negative tone coming in from the central bank in terms of inflation and quantitative easing. Okay, and of course interest rate timeline, if they were to provide any. All right, so you guys can actually set a buy stop and a sell stop order, okay, respectively, and wait for the central bank decision to take place before, you know, see if any of the trade trade ideas were to be triggered. Okay, so that's for the euro yen. Now moving on to pound yen. Okay, we see that on a daily time frame, pound yen is actually trading up towards the 155.9 resistance level. Okay, at the moment, okay, let me bring your attention to this. At the moment, we have this 155 key level over here. Okay, And at the moment, it seems like it has already broken above 155 key level. Okay, but right now at the current day candle today, okay, it's actually testing the level again. Okay, whether or not it will break below or whether or not it will continue upwards. All right, this will really depend on the Bank of England meeting later on today. Okay, now in a scenario whereby the central bank were to hike interest rates and provided it's a hawkish hike. Okay, hawkish hike meaning we have a hike in interest rates, and the Bank of England were to say something like, "Oh, we can expect more interest rate coming in the near future." Okay, because inflation is really rising very high and it seems to be more persistent than before. Then we may actually be seeing a strengthening in the British pound. Okay, hence we will have to wait for the pound yen to break above this resistance level of 155.9 before looking for buying opportunities. Okay, the level that I'm looking at is 156.2. Okay, 156.2. Let me just change this for easy viewing. 156.2. Okay, it's quite a distance, I would say. To be honest, okay, it has to really break the resistance. All right, then our stop loss will be set at 155.7, okay, which is around here, which is behind the support. By the time it will become support, okay, and then my potential take profit will be at 156.8, which is around here. Stop loss will be at 50 pips, take profit will be at 60 pips. Pretty much a 1:1 risk reward, okay. But personally, I'm actually more keen to sell pound yen, okay? Well, just looking at the chart itself, okay, because we have a long way to go in order for us to look for buying opportunities, right? But selling wise, okay, I'm actually looking at 154.8, which is around here, okay. So 154.8. Let me just get the color to orange. Okay, 154.8. And 154.8 is actually like some 40 pips. It's just some 40 pips away from the current trading price. Okay. Just solely based on this chart, okay, I would prefer to sell. Okay. But chances are the Bank of England, may be more hawkish than dovish, okay? Because first of all, we can expect a rate hike coming in, and secondly, I don't see there's much reason for the Bank of England to stop rate hike right now, okay? Because inflation is still high, and the UK employment is still good, okay? It's still good. Jobs market overall situation is still positive, okay? Hence, we can actually expect more interest rate hike, okay? So it's a bit confusing, right? Over here, I'm trying to, just get things right a bit, okay? So stop loss for this sell stop over here is 155.2, which is just 20 pips above the 155 key level, okay? 155.2, 5.2, okay? Which is 40 pips, all right? And then my potential take profit would be at 154.2. 154.2, which is 60 pips. All right. So once again, unless there's a very strong dovish message sent by the Bank of England, otherwise unlikely it's going to break below 154 key level. Okay. There must be a strong conviction before it can actually break below, right? Like you see previous back in towards the end of January, around January of 24th, 25th, and 26th. Okay, we actually see that pound yen for 2 days actually has been trying to break below the 154, but in the end it actually bounced back up. Okay, so for it to really go below 154, I don't know. Governor Bailey has to put in a lot of effort to to convince the market that we are not going to look for any more rate hikes coming in. Okay, so in the scenario whereby the Bank of England were to hike interest rate later on today, okay, but then the governor, okay, or maybe in the rate statement, if they were to actually mention something like, that's it for now, okay, we are going to take a break from rate hike, okay, we're going to pause the whole interest rate hike, we're going to take a wait and see approach before considering any further rate hike, then this scenario is known as a dovish hike. Okay, a dovish tone coming in from central bank, although we have a hike in interest rate. Okay, hence a dovish hike. So when we see a dovish hike, when we have a dovish hike situation, chances are there may be a initial strengthening in the currency, okay, because of the hike. But then later on, probably like shortly after, maybe a few minutes later, okay, we will see price actually come back down. We will see that specific currency, okay, weakens back again. All right, hence dovish hike. Okay, and then hawkish cut will be the direct opposite. Okay, hawkish tone coming in despite a cut in interest rate. Okay, so that is for pound yen. All right, we'll be looking for buying and selling opportunities depending on how the Bank of England acts later on today. Okay, then moving on to the chart here. Moving on to XAU USD, which is gold against the US dollar. Okay, we see that on a daily basis, okay, gold has bounced off my support of 1780 dollars. Okay, so recently, like what Scott has mentioned just now, because of the whole Ukraine and Russia geopolitical turmoil and things like that. Okay, the US dollar has taken a hit. Okay, and because of that, whenever the US dollar taken a hit, there is a negative correlation, okay, between the US dollar and the gold price of gold. Okay, so when US dollar weakens, we can see that XAU USD will do strengthen. Okay, that probably explains why for the past 3 days, okay, we actually see a strengthening in gold prices. Okay, so because of that, at the moment, okay, I would say that there is small further upside in the gold versus the US dollar. So at the moment, it's trading at 1807 dollars. Okay, so gold may have more upside towards like the 1820 level over here, or maybe even 1830 level over here. Okay, so I would look for buying opportunities on XAU USD, okay, all the way up to probably like 1820, and then I'll start to pay attention to it. Okay, it's a bit of a, I would say, small upside. Okay, and then downside wise, to be honest, it has to go below 1800. Okay, it has to go below 1800 before I'll be looking for selling opportunities. Okay, so that is for the gold right now. All right, actually there are really tons of trading opportunities in other currency pairs, so gold may not be the best one to pick, well, at least for this week. Okay, because we have euro to trade, we have pound to trade, and then coming to tomorrow, okay, NFP, we have US dollar as well. Okay, but unless there's a strong strengthening or weakening in the US dollar, okay, otherwise gold may not move that much. Okay, may not move that much in response to the US non-farm payroll data that we release tomorrow. Okay, so that's for the gold trade idea. Any questions on the trade ideas or any of the upcoming monetary policy decisions by the two central banks? Okay, if there's no questions, there will be a session. Okay, there will be a session tonight at 2000 GMT plus 8. Okay, I know someone has requested for the session to be held earlier. Okay, Jin will be joining us today. Okay, so I will have to speak with him first to see if can actually hold a session earlier today. All right. So if you guys have any questions on fundamentals and things like that, yeah, just bring it over to the Traders Club session tonight, and we will go through it with you guys. All right. If there's no questions, I will hand it back to Scott.
Oh, right. Thanks for that, Gimme. And just a reminder, guys, we do have that evening live trading call tonight as well. So stay tuned for updates on the exact start time. And make sure that if you didn't get everything of the call, make sure you watch the replay that will be uploaded soon. And that is it for today, guys. Thanks for joining us again. And we'll see everyone later in the evening for the live trading call. Bye for now. Have a great rest of your day.